We are live from the NASDAQ market site in New York City. Now, in an era of volatility, the resilient consumer persists. Consumer spending picked up in September, according to the Fed's preferred inflation gauge. Underlying inflation also accelerating, though, to a 4-month high. So what do the next few months have in store for Americans? Yahoo Finance has an exclusive sneak peek at Santander's survey on the headwinds facing middle-income households. Joining us now with more is Tim Wennes, Santander U.S. CEO. So thank you so much for joining us this morning and for this early insight into where middle-income households stand. Why don't you take us through some of the key findings that came out of your research?
Thank you, and it's great to be with you this morning. I think what we saw was that consumers remain resilient and also optimistic. More than 2 in 3 middle-income Americans, and those are people that earn somewhere between $50,000 and $150,000 a year, remain on track with respect to achieving their financial goals and prosperity. And we've got nearly 3 in 4 are optimistic that they'll be able to achieve financial prosperity in the next 10 years. That being said, not surprisingly, inflation remains the largest obstacle. Over 80% of middle-income Americans are concerned and having to make adjustments to spending because of inflation. So I think the key takeaways are consumers resilient, they're optimistic, but inflation remains a watch point.
And Tim, you certainly have a great look at this because I know the majority of your customers are retail or consumer focused. So when you talk about the fact that inflation continuing to weigh on the consumer, what are you seeing just in terms of spending patterns or how this is affecting their investment or spending behavior?
So we're not seeing big changes, and consumer spending came out. So I think on everyday items that continues. But what we did see from our survey is 50% of consumers have put off or delayed large purchases such as a car, and we have more than 40% anticipate that they'd like to buy a vehicle in the next 12 months. And so I think this suggests that we'll see continued strength in terms of used car prices and that demand will remain resilient over the next couple of quarters.
So, Tim, it's often talked about how strong and resilient the American consumer is. We like our goods, our services, our experiences, et cetera. But talk to us about the impact of the student loan repayments coming back. What did you see in your data?
We've got a third of middle-income Americans have some responsibility for student debt. Either they have it themselves or someone in their household that they feel responsible for has it. And a high percentage of them are concerned about the impact and believe that this will impact their prosperity in the coming 2 quarters. So we do think that will be a drag and be impactful for consumers here starting in October.
Tim, when it comes to confidence within banks specifically, obviously when you look back to March and a lot of the issues that we saw within the regional banks following the collapse of 3 of those banks, are consumers, has that confidence been restored? I guess, how are they feeling just about the strength within the sector at this point?
Yeah, what we've seen here at Santander is that communication is key and key to trust, which is the cornerstone of our industry. And so we've seen that be positive and stable here at Santander. And in our survey confirmed, we had in the mid 90% of people indicated that they have confidence in their financial institution and in the industry. I think that's very positive. And as you can see there on the screen, they have confidence in the safety and stability of their specific bank and that their deposits will be available to them. So I think this suggests that we're beyond the events from March and into a much more normalized environment.
Tim, just as CEO of Santander U.S., have you at all shifted your strategy or how you're assessing risk following the events that happened within the sector earlier this year?
We're one of the systemically important financial institutions here in the U.S. And so we've had monitoring controls and processes in place around interest rate risk, liquidity risk, and credit risk. So certainly we've heightened our view of this, but felt like we had the right controls in place to be navigating through the dynamic environment that we've seen over the last 18 months. That was true earlier in the year and remains true today.
And Tim, I want to tie that into the data that you saw in terms of consumers and middle income households, how they feel about their confidence in banks.
Yeah, so they remain confident. I was pleased to see the mid 90% range here. And one of the other things that I think was important is what we've seen now is about a third of consumers have taken advantage of higher interest rates. So I think there's been a lot to talk about the negative impact of higher interest rates, particularly on borrowers, but also for those with savings and investments. This is a real opportunity. And I'd say we were somewhat surprised that only a third of respondents have done something about that and taken advantage of higher interest rates. More than 8 in 10 middle-income Americans have a savings, CD, or some investment product, and only a third have moved. And I think, importantly, for consumers to be aware and also take action so that they can benefit from this higher rate cycle.
So, Tim, it sounds like, or are you confident then at this point that the U.S. is going to be able to avoid a recession?
I'm not an economist, so I don't know that I want to predict that. We are prepared for higher for longer in terms of rates. In our business, we are one of the largest auto lenders in the country. We're a full spectrum auto lending from super prime, prime, all the way through non-prime. We have seen the impacts of inflation and higher delinquency rates, but we also see resilience there in terms of consumers. So we don't see any troubling signs that suggest that there's a recession or major challenge in the near horizon.
All right, Tim Wennes, great to have you here. Thanks so much for sharing your insights. Santander U.S. CEO. Thanks, Tim.
Thank you so much.